Did the IRS just file a tax return for you without your permission? This is called a substitute for return, and it could cost you thousands more than you actually owe. In this video, I'll show you exactly what a substitute for return means, why the IRS does this, and the three critical mistakes that make your tax bill worse. Hi, I'm Pietro Canestrelli. I used to work as an IRS attorney in Washington, D.C., so I've seen firsthand how the IRS operates. If you're dealing with tax issues and need guidance from someone who understands the system, give me a call at 951-319-7674 for a free consultation. So first, let's talk about what a substitute or return actually is. When you don't file your tax return, the IRS has the legal authority to file one for you. This is done under Internal Revenue Code 6020B. They use information they already have, like your W-2s from your employer, 1099s from clients or banks, and other reports sent by third parties. Here's the problem. The IRS doesn't include deductions, business expenses, or credits on a substitute for return. They calculate your tax liability based solely on income information reported to them. This means the tax bill will be higher than if you had filed your own return with all allowable deductions and credits. So why does the IRS do this? The IRS is required by law to assess taxes when returns aren't filed. They don't do this immediately, though. First, they'll send you multiple notices warning you to file. You might get a CP 501, then a CP 503, and then a CP 504. These notices are giving you opportunities to file on your own. But if those notices go unanswered, the IRS will eventually file the return themselves and send you a notice of deficiency. In California, the Franchise Tax Board can do something similar for state taxes if you don't file your California return. The substitute for return process is designed to move cases forward when the taxpayer don't respond to notices. Now, here are the three critical mistakes that make this situation much worse. Mistake number one, ignoring the notice. When you receive a notice of deficiency, you have exactly 90 days to respond. This deadline is set by law. If you don't respond within that deadline, the tax assessment becomes final. Once it's final, the IRS can start collection actions. That means wage garnishments, bank levies, and federal tax liens. Mistake number two, assuming the amount is correct. The IRS calculates a substitute return based only on the information they have. They don't have records of your business expenses, your deductions for dependents, your retirement contributions, or any tax credits you qualify, which can lower your overall tax amount. When you file your own return, you can include all these items, which typically results in a lower tax liability than what appears on the substitute for return. Mistake number three, not filing your own return. You can still file your actual tax return even after the IRS files a substitute for return. When you file your own return with all your deductions, expenses, and credits, it can replace the substitute for return in most cases. Your return will reflect your actual tax situation based on complete information. So here's what you need to do if this happens to you. First, file your actual tax returns immediately. Include every deduction and credit you're legally entitled to. Document your business expenses, claim your dependents, provide the complete picture of your tax situation. Second, if you're still within that 90-day window after receiving the notice of deficiency, you have the right to challenge the IRS assessment. You can petition the U.S. tax court to dispute the proposed tax liability. You don't need to pay the tax first to do this. Third, if the 90-day deadline has already passed, you can request something called an audit reconsideration. This is a formal process where you present your actual tax return and supporting documents to show why the substitute for return assessment should be adjusted. The substitute for return assessment will remain on your account unless you take action to address it through one of these available procedures. If you received a substitute for return notice, call us at 951-319-7674 for a free consultation. As a former IRS attorney, I know exactly how to challenge these assessments through the proper legal channels. Now, what happens if you try to set up a payment plan with the IRS and they reject it? Watch this next video to know the answer and more.